Hi everyone, today we'll be going over accounts October-November 2021, paper 3-1, question number 2. This is structured paper 3, which consists 6 questions, each of 25 marks, and we are also given a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 2 is a part of section A, which relates to financial accounting. Without any further delay, let's get started. DW Limited is a small manufacturing company which seeks to implement the requirements of international accounting standards. Its financial year end is 31st December. At the end of 2019, the directors decided to replace the manual accounting system with a computerized one. So the directors are trying to introduce computerized system. And at the beginning of 2020, the company bought the computer equipment and the software and sent staff on a training course. Now, for the first part of this question, we need to outline the next steps the company needed to take to implement the computerized accounting system. Our answer should also consider the need for both accuracy and security, and the question is of 8 marks. So we need to write down at least 8 steps the company needs to take in order to implement the computerized accounting system. So let's write it down. The first one would be to select a specific date for the transfer from our manual system to the computerized accounting system. Let's write it down. Select a specific date for the transfer. Secondly, we also need to ensure that the data on the manual system is up to date so that we can start our accounting system in the computer using the available software. So let's write it down. Ensure the data on the manual system is up to date. Thirdly, for any computerized accounting system, we need to set up passwords for security reasons, right? So let's write it down as well. Set up passwords for the new system. And since we're talking about computerized system, we also need to protect our software from any kind of virus or firewall encroachment. Let's write it down as well. Ensure there is adequate virus and firewall protection. And we are transferring our entire accounting system into a computerized one. So we definitely need to set up our account names in the new software as well. Let's write it down. Set up the account name for the new system. And we're talking about a computerized accounting system, which means that every data will be available in our computer. But if the computer were to crash somehow, then the data will also be deleted. So we definitely need to keep a backup, right? Let's write it down. Organize backup of data for the new system. Then we need to test our computerized system. In order to do so, we need to run both the manual as well as the computerized system in parallel. Let's write it down. Run both manual and computerized system in parallel. Okay, lastly, we can finally discontinue the manual system once we are satisfied with our new computerized accounting system. Let's write it down. Discontinue the manual system once satisfied with the new system. So we've completed the steps the company needs to take in order to implement the computerized accounting system, and this concludes the first part. Now we can move to the second one. We are given additional information. The company accountant prepared the draft income statement of the company for the year ended 31st December 2020. When the finance director reviewed it, he thought that it might contain errors, and he identified 5 areas where he thought an error might have occurred. And we are given those 5 areas. Let's have a look at the question first. We need to complete the table showing the effect of the correction of errors on the draft profit for the year. So we are not asked the effect of the errors, we are actually asked the effect of the correction. So what happens when we correct those errors? We are required to find that particular amount. Then, in the second column, enter the amount by which the draft profit for the year would change due to any correction of errors. State whether the correction increases or decreases the profit. If no correction is needed, enter nil. Alright, and in the third column, we need to explain why the correction is needed or why no correction is needed. Let's review our first error, which is related to training. Let's have a look at the above information. The staff training had cost 5,000, and since the employees of the company usually stay with the company for about 10 years, the accountant had decided to charge 500 to expenses for staff training each year for 10 years starting in 2020. So this basically means that the accountant actually capitalized this staff training cost. And now we need to figure out the effect of correction of this particular error. What we know is that staff training should not be capitalized because this is not an expense that we can cover over a range of years. This is the expense relating to this particular year, which means that full cost of the staff training should have been written off when incurred, which means that rather than charging 500 as an expense under the heading of staff training, we should have actually entered 5,000 as an expense, right? So the expenses are actually undervalued. Since we only entered 500 out of 5,000, right? So the 500 is already accounted for, then the remaining amount is going to be 4,500. So we can conclude that our staff training cost had been undervalued by 4,500. And if we are to add this undervaluation to our income statement, then we will actually be increasing our expenses by 4,500, right? And expenses is something that we already decrease. Now, if we're adding the 4,500 to an expense, this will again give a decrease, right? So this means that our profit for the year will be decreasing by the amount of 4,500 due to the correction of this first error relating to staff training. Let's write it down. So the decrease of the profit is by 4,500. So that's 4,500 decrease. And we need to write our explanation. So the explanation is just going to be that the staff training should not be capitalized and should actually be written down as a cost when it was incurred. Let's write it down. So staff training should not be capitalized and the full cost should be written off when incurred. Alright, now we can move to our second error, which relates to vehicles. Let's have a look at the above information. An impairment review had considered vehicles with a carrying amount of 72,000, and it found that their fair value was 67,000 and their value in use was 65,000. The accountant included an impairment loss on vehicles of 7,000 in expenses. Alright, so what we know is that impairment loss is actually just the difference between carrying amount and our recoverable amount. So this means that impairment loss can only occur when the carrying amount is greater than the recoverable amount. And the recoverable amount is actually just the higher of fair value and value in use. Now in the error, we are given the information relating to both of these headings. So the fair value is of 67,000 and the value in use is of 65,000, which means that our recoverable amount is going to be the higher of these two values. We can clearly see that the fair value is higher, so the recoverable amount is going to be the fair value, which amounts to 67,000. Okay, and we are already given the carrying amount, so we can now easily figure out our impairment loss. So carrying amount is 72,000 and recoverable amount is 67,000. So our impairment loss should have actually been 5,000. So only 5,000 should have been written down in our expenses as impairment loss, but we can see that the accountant included the impairment loss of 7,000. So we can say that our expenses were being overvalued by 2,000 because that's the difference. It should have been 5,000, right? So out of 7,000, only 5,000 should have been included. So the remaining 2,000 is an overvaluation. So we need to adjust this overvaluation in order to figure out the correct profit. So we know that impairment loss is an expense. So expenses are always deducted in order to figure out the profit. And since we're talking about overvaluation, in order to correct this, we also need to deduct this overvalued amount of 2,000. So that's another negative, which results in a positive. So this means that our profit will actually increase by the amount of 2,000 while correcting this error relating to our vehicle. Let's write it down. So the draft profit will increase by 2,000. And the reason here is that the recoverable amount is the higher of value in use and fair value, and the impairment loss was only 5,000. Let's write it down. Recoverable amount is the higher of value in use and fair value, and the impairment loss was only 5,000. Now we can move to the third error relating to machinery. Let's have a look at the above information. An impairment review had considered machinery with a carrying amount of 98,000. It found that its fair value was 81,000 and its value in use was 102,000. The accountant included an impairment loss on machinery of 17,000 in expenses. Alright, as we said before, the recoverable amount is just the higher of the fair value and value in use. So in this case, we can see that the fair value amounted to 81,000 and value in use amounted to 102,000. So our higher amount is going to be value in use, which means that the recoverable amount will also be the value in use, which amounted to 102,000. And since we're talking about impairment loss is just the difference between carrying amount and recoverable amount. And like I said before, impairment loss can only exist if the carrying amount is higher than the recoverable amount. We figured our recoverable amount to be 102,000, and we can see that our carrying amount is 98,000, which is actually less than our recoverable amount, which means that there cannot be any impairment loss. So this impairment loss of 17,000 should not have been included in the first place. So what we can say is that our expenses is being overvalued by 17,000 because this should not have been included, right? And we're talking about expenses, which means that they are to be deducted in order to figure out the profit. And while correcting any overvaluation, we need to reduce that particular amount. So that's another negative, which results in a positive. So this means that while rectifying the third error, our profit actually increases by the amount of 17,000. Let's write it down. So that's an increase of 17,000. And the explanation is just that the recoverable amount is higher than the carrying amount, so there is no impairment loss to account for. Let's write it down. Recoverable amount is higher than the carrying amount, so there is no impairment loss to account for. All right, now we can move to our fourth error, which relates to inventory. Let's have a look at the above information. Water damage had destroyed inventory costing 8,000 on 5 January 2021. So we are talking about our year ended on 31st December 2020. And this is a date which is a later date than our closing date, right? The accountant took this loss into account when preparing the income statement. So this 8,000 was actually entered as a loss for this particular year ending 31st December 2020 when the inventory was actually destroyed at a later date, right? So this expense or this loss of 8,000 did not actually occur in this particular year. So this should not have been accounted for in our income statement for this particular year. What we can write down is that our expenses is being overvalued by 8,000 because this is not a loss relating to this particular year, right? And we're talking about expense which is deducted when figuring out our profit for the year. And we're talking about overvaluation. In order to rectify this, we again need to reduce this particular amount. So that's another negative, which results in a positive. This means that our profit will actually increase by 8,000 while rectifying this error relating to inventory. Let's write it down. So that's 8,000 increase. And the justification for this is that the damage actually does not relate to the year end, and it is actually a non-adjusting event which only needs to be disclosed in a note. Let's write it down. The damage did not relate to a condition at the year end and is a non-adjusting event which only needs to be disclosed in a note. Now we can move to our fifth error relating to premises. Let's have a look at the above information. So the premises have been revalued upwards by 28,000 at the year end, and the accountant omitted to record this. We're talking about draft profit, right? And upward revaluation is not accounted for in our income statement. This is actually recorded in our statement of changes in equity in the revaluation reserve section. So this does not affect our income statement at all. So there's not going to be any changes while correcting this particular error in our draft profit. Let's write it down. So since there is no increase or decrease, we can just write down nil. And the explanation is that revaluation does not affect profit as it is credited to a revaluation reserve. Let's write it down. Does not affect profit as it is credited to a revaluation reserve. Okay, this concludes our second part. Now we can move to the third one. We need to explain why the errors corrected in B had not been caused by the computerized accounting system. Okay, so let's have a look at the above errors. So for the first one, the accountant actually decided to charge only 500 and capitalize the staff training costs, right? So the fault is of the accountant and not the computerized system. For the second one, the impairment review, and again the accountant actually included an impairment loss, so which means that the accountant input this particular data of the impairment loss amounting to 7,000. So that's not the computerized system's fault again. And for the third part, again, it's the accountant who included an impairment loss. So that's actually an input error. For the fourth one, the accountant took this loss into account. So the decision to take it as a loss was of accountant, and the computerized system did not make that decision on its own. It was actually something that the accountant decided for, right? And for the fifth part as well, the accountant omitted to record this, not the computerized system. So we cannot really say that these errors were accounted for by the computerized system's fault, because they arose from errors in data input rather than processing errors. So these are the input errors that the accountant made and not the computerized system. Let's write it down. Because they arose from errors in data input rather than processing error. This concludes our third part of this question as well as the entire question. If you found this video useful, make sure to like the video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.